So all these days we were bullish in the market. Everyone was expecting the market to touch 20,000 or 50,000, and I was the only guy who told markets are not going to go on the upside. Upside is very much limited, and people used to tell me that I am very negative and I don't know about the market, that this and all. They abuse me a lot, but it's okay. It's part of the social media. But what is happening now is we are in a bearish territory, official bearish territory. There is no way the markets are going to go up in the near future. Maybe it will go, but it's not going to happen in the near future. Now things lined up, whatever incidents happening around us, say it, Russia Ukraine issue, US interest rate hike, inflation, crude prices going up. I think today crude oil has gone above $110 dollars per barrel. So considering all these factors, what can we do for staying in the market? First thing is, when the VIX is shooting going up above 25 or 30, you shouldn't be in the market. You have to be away from the market. But still, if you want to be in the market, or you are curious about the market and you want to be in the market, means these are the strategies which you can deploy and see if these strategies can make money. Now all these days we have been non-directional, right? Either we do a straddle or either we do a strangle, which is not going to work anymore. You tell me which straddle is going to work. Of course, if you go ultra long term, then you will find straddles which may not work. But you need to do some adjustment and you need to have some funds, and emotionally this market is going to kill you if the market makes two-way or three-way move. Seeing at the MTM profits or MTM losses, you will be emotionally screwed. So that's why we were insisting our subscribers not to be in the market. But anyway, as I told you, if you want to be in the market, so look at these strategies, see if these strategies can help you, right? So let us see the strategies one by one. So I'll go to sensible now. There are many strategies, and the first very basic, there are also very basic strategies, and I will tell you the pros and cons of the basic strategies. Now let us say markets are going to go on the downside, right? So that's what we are expecting. So simple way is to buy a at the money put option. So you know what is this? I don't have to explain you. But in case you don't know what is put option, buying a put option, very simple. You just need whatever at the money premium is, and you just have to pay. Even if you are having 20,000 or 15,000, you can do the strategies, and that is the main advantage of this strategy. You don't need a high capital like what you need in option selling. So you just buy a put option, and in case if the markets as you anticipated goes down, you will make money. Let's say market is at 16,245, and in case if the market goes to around 15,940 or even 15,500, you are going to make a good money. So that is very simple, right? So the other strategy is to just sell a call option. Let us say you are bearish in the market and you expect the market to go on the downside. The opposite of buying put option is selling a call option. Unlike buying a put option where you require very small amount of capital, when it comes to selling a call option, you will require money. You will require a good amount of money, around maybe 1 lakh. So what this sensible is showing is you will require at least a capital of 1 lakh rupees for taking this trade. So it's a very expensive trade, right? And in case the market goes on the opposite direction, you will make big losses. So profits are very limited and the losses are very high. Unlike buying a put option where the losses are limited and the profits are unlimited, when you sell a call option, exactly opposite of buying a put option, right? So I wouldn't recommend anyone to taking these kind of strategies. These kind of strategies are called naked strategies or unhedged position. So when you take an unhedged position, what is going to happen is, in case the market moves in opposite direction, or in case something goes wrong, or your view goes wrong, then you will feel the pain, then you will feel the heat, and one wrong move against your position is going to kill your capital. So I wouldn't suggest anyone to sell a naked call option. And India VIX is already on the higher side, and markets may tend to make two-way, three-way moves. So it is not advisable to sell a naked call option. So I hope you are clear on these things. So the next strategy is, let us say you can take a bear put spread. So what is a bear put spread? Now let us say we are bearish in the market and we want to make money in case the market goes down, but at the same time, if the market reverses, we don't want to make losses, right? That is why we are here to make profit, and we don't want to make loss. So in case the market goes down, we can do a simple strategy called bear put spread. So what is a bear put spread? It is nothing but buying at the money call option, put option, and selling out of the money put option. Now what I have done is, market is at 16,250. I have bought at the money 16,250 put option, one lot, and simultaneously I have sold 16,000 put option at 149, right? So I buy at 239 and I sell at 149. So in case the market goes down, the difference of around 110 rupees is going to be my profit, and the margin required is also very little. One lot will cost you just 30,000, and in case this strategy goes into loss, you will have a maximum loss of around 4,523, and in case if this strategy goes into profit, you will make a profit of around 7,978. So the risk reward is really good. So that is why I suggest, many people suggest to go for hedged strategies. So in case the market moves opposite way, you can make good profit, right? So the next strategy is called bear call spread. So what is bear call spread? So there is, you may think, seeing at this graph, that bear put spread and bear call spread are same. In bear put spread, what we did is, we bought up at the money put option and subsequently simultaneously sold out of the money put option. But in bear call spread, we are going to do it in a different way. What we are going to do is, instead of buying put option and selling out of the money put option, we are going to sell at the money call option and simultaneously buy out of the money call option, right? So this is the difference between bear put spread and bear call spread, right? Bear put spread is buying at the money put option and simultaneously selling out of the money put option. But bear call spread is selling at the money call option and simultaneously selling out of the money call option. So this is the difference between bear put spread and bear call spread. So when you compare it with bear put spread, bear call spread is going to cost you a little much more. Maybe that strategy, which is bear put spread, will cost you around 30,000. But this strategy is going to cost you little more, maybe 36 or 40,000 rupees it will cost you. And the maximum profit is going to be 5,575, and the maximum loss is going to be around 7,000, and risk reward is not in our favor, right? But when you ask me what if I had to take these strategies, if I had to select one of the two strategies, I would go for bear put spread because I get a good risk reward ratio, plus I am going to save some money in the margin also. So not much but very little money from the margin. And the next strategy is called bear ratio spread. So what is bear ratio spread? So this is a little complicated. I wouldn't say complicated, some little complex strategy. So the strategy is very simple. What we are going to do is we are going to sell at the money 16,300 put option, and simultaneously buy to 15,800 put option, right? So what I'm doing here is I am selling 16,300 put option. At the same time I am buying 15,800 put option 2 lots. So 1:2 ratio. So if you want, you can increase the ratio from 2 to 4 or 2 to 6 or even 8 you can do. And I know people who do ratio spreads like 1:10 also. They buy at the money put option and sell far out of the money put option, even 10 lots or even 15 lots. But you have to remember, you will require lots and lots and lots of money to do this strategies. This is good strategy. You can make ratio spreads in favor of you, and the probability of winning is also high. But the problem is, in case the market goes against you and touches this thing, you will face problem, right? So you'll have to understand that. So this is the ratio. I think I'm talking about ratio spread. Yeah, I'm talking about ratio spread. That ratio, whatever I told, 1:10 or 1:15 or 1:20 is about ratio. This is bear ratio spread. So I'm sorry for confusing you. Anyway, since we have talked about the ratio spread and its ratios, I will explain that at the end of this video also, right? So sorry for that. And the next strategy is called short call butterfly. So what is short call butterfly? It is kind of non-directional strategy where you buy you sell at the money 16,200 call option, and you sell at the money 16,200 call option. At the same time you buy 16,400 2 lots call option, then sell simultaneously 16,600 call option 1 lot. So the ratio is 1:2:1, right? You are selling 16,200 call option. At the same time you are selling 16,400, you are buying 16,400 call option 2 lots, and simultaneously you are selling 1 lot of 16,600 call option. Now this can be done 1:3 ratio also. That is what I'm going to do. So yeah, sorry, not 1:2. Maybe you can do 2:4:2. Now to show you people how this will work, I have just done this strategy 1:2:1 spread. Now if you want, you can do 2:4:2 also, or maybe 6:, like that. You can keep on increasing with regards to your risk appetite, and the risk reward ratio is very low. Maximum profit is going to be 15,583, and the maximum loss is going to be 8,418. So, and the margin required will be around 51,000, and some people call this ladder strategy also. So if you want, you can take this trade also. So coming back to our this thing, ratio spread, what we can do is, I'll just explain you how ratio spread works and how you can increase the margin also. Let us say market is at 16,200. So what I'm going to do is, I'm going to buy 16,200 250 put option and simultaneously sell 15,850 call option, maybe 2 lots. Right now, what I'm going to get here is, I'm not going to get anything, or I'm not going to spend also, because the buy value of 239 is compensated by the 15,850 put option which I have sold. So I have bought one lot for 239, and at the same time I am selling 2 lots of 15,850 at 110 rupees. So this 240 rupees is compensated by the sell side. So neither I'm going to buy spend anything, but I'm not going to get anything also. So I'll not be having a credit or debit transaction in my trading account. But at the same time, you have to remember the margin required for this is going to be 92,580, and loss is going to be unlimited, and maximum profit is going to be around 19,000. Now you can make this, instead of, as I told you, this is 1:2 ratio. Now let us say I have good amount of money, I don't have to care, I can go and sell 15,550. Instead of selling 2 lots, maybe I can sell even 4 lots, right? So I'm going to get the same effect, and you can see here, as and when I have increased the lot size, the margin money or the funds required is also increased to 50,000. From earlier it was around 55,000 or 60,000. Now it has come to around 2 lakh rupees, right? So in case the market moves down as we anticipated, but doesn't touch 15,500 before expiry, means we are going to make good money, right? So that is the objective of this strategy. Now, like this, there are many strategies where we can deploy and we can test our skills. And I am again telling you, there is no necessity you have to be in the market. And I would advise all traders, if India VIX shoots goes above 25 or 30, you have to stop trading. In case you are curious, you want to be in the market, you can try out these strategies, and you can test these strategies, or maybe do some alteration to the strategies, and make it work in favor of you, right? And also let me know what you think on the comment section below. I hope you enjoyed this video. Thank you for watching. Take care. Bye.